Alright, so I'm not sure what title I'm going to use for this video. The gist of this video is I want to go over what is the best time to enter a trade, and I want to focus on a sequence of confirmations that I've seen enough times to establish as a pattern. And that sequence is, well, typically you will see divergences before you see a market structure break or a change of market structure, a change of trend. And then often, once you see a change of trend, that is when you can see a retracement with further confirmations. Confirmations such as market cipher basic strategy, or local market cipher divs, or CVD absorption. And so I'm going to be going over 3 different ways to enter the same trade. And in this video, I'll be discussing a sequence of setups I see relatively often with 3 different opportunities to enter the same trade idea at different points and with different confirmations. And this is going to be an introduction video. I will lay out the idea for this concept and show a few examples. And in the future, I want to follow up with more videos breaking down specific parts of this strategy, doing more testing, and taking some live trades comparing these 3 different points of entry. The first thing that you usually see prior to a reversal is divergences. Now, you don't always see divergences prior to a market structure break, but more times than not, you will. At least if you're using Market Cipher, that's what I've found. And I do view this as the early way to enter on a potential reversal. Divergences are usually best when paired with SFPs or reactions off of a refined level or area. Obviously, if you're just trading every single divergence you see without planning out specific levels in which you'd like to see them at, without, even pairing them with things such as SFPs or strong reactions, then you probably won't have a very high win rate. But there are definitely ways to, have a very high win rate when using divergences. Also, judging the strength of the div by using different time frames. It's obviously better if you see divergences on multiple time frames rather than just one, or at the very least when maybe low time frame divergences look like they can play into how the higher time frames are looking. Maybe, on the 1 hour you're seeing a trigger wave print, or you're just seeing momentum and money flow start to turn to the upside as you're seeing lower time frame divergences. And I never look at just one time frame when I'm looking at market cipher confirmations. I click through multiple time frames. I like for most time frames, or more time frames than not, to be pointing in the direction in which I'm looking to trade. And it's also a good idea to prioritize strong looking divergences, which in my opinion is divergences not just with the market cipher momentum waves, but also with money flow. And I'm not going to be, breaking these things down in full detail. I'm just going to be brushing over this stuff because I want this video to really focus on, again, the sequence of confirmations that you see and how one can lead into another. I've made plenty of videos, or I've at least talked about in many of my videos, what I think a strong looking divergence is, but I don't think I have, just one video specifically for that purpose. So I think maybe I should do that. So if you are watching this video at some point in the future, maybe I have added a specific video for this purpose. And if I have, then I will put that in this Market Cipher playlist of mine. I also have playlists where I go over a lot of the other strategies that I will talk about in this video. I'll point them out as I get to them. Now, you can say that these kind of entries are riskier than maybe waiting for further signs of strength. Now, of course, this is subjective. It comes down to how you go about taking these kind of trade setups. It comes down to when you enter them, when you de-risk them, what are the parameters in which you'll even consider a trade? Are you, really putting in the work to plan out a good trade setup? And if you are, then you can certainly decrease the risk and increase your probability of it being a profitable trade. And this is definitely more of a scalp-like approach. With these kind of trades, I always look to de-risk, take profits, move my stop loss to entry relatively quickly. These are not the kind of trade setups that I like to just enter them and hope that the divergences will lead to a change of market structure and will give me some kind of massive move from them. I like to be realistic with them, but you oftentimes can get pretty decent risk reward if you have your entries down and if you're entering off the correct confirmations. Now, these do give you less of a confirmation of a more significant reversal from that point, but again, if you're good at playing these, meaning you enter at the right time, you take profit and move stop loss at the right time, and then leave some to run for just in case these divergences lead into a more significant development with price action, then you can oftentimes get the best entry for these trades. I mean, if you're entering at the bottom of a move or at the top of a move, then there is a pretty good chance that your stop loss may stay intact and you may be able to take advantage of the larger move if you're leaving some to run. And when I do follow-ups to this video, I will go over in more detail things that I like to see, ways that I like to play this. Yeah, oftentimes you will see divergences prior to a reversal of market structure. But let's say you didn't take that divergence trade, you weren't confident in your ability to play that correctly, you wanted to wait for more of a sign of strength. So next would be a market structure break. And for me, if I'm going to enter on a break as soon as I see the break, if I'm just going to mark it in as soon as market structure changes, risk reward has to make sense. I have to have clear targets, I have to choose the correct stop loss, and just to kind of doodle out an example here, if I'm looking at this kind of trend and then the trend breaks, but let's say I'm only targeting maybe a point of control that's up here, does it really make sense for me to enter on this break, have a safe stop loss down below that last lower low, just to target up to that point of control with a 0.73 risk reward, meaning for every dollar I risk, I'm looking to make 73 cents? No, I don't think that makes a whole lot of sense. In this scenario, I probably won't enter on the break. But if I have reason to think that this market structure break will give a more significant move, maybe the area that I'm targeting, whatever it may be, is much higher up, and I can get maybe a 2-to-1 risk reward, which isn't great still. I usually like to aim for at least 3-to-1s. And if risk reward isn't as great as I'd like it to be, but maybe it's still decent, I oftentimes will partially enter on the break. Maybe if I'm looking to risk 1% on the total idea, I'll enter half of the trade on the break, and I'll look for opportunities to add to the trade, maybe even on a retest, and that could give me an opportunity to lower my average entry. Now, to quickly go over some rules with market structure, this is not something that I'm going to be going into great detail with, for the sole reason that damn near everything I've learned about market structure has come from White Phoenix. He is a trader that I found through Jason Casper. He is a trader in Jason Casper's VIP Discord. He also has a course on Jason Casper's website. So everything I've learned about market structure, for the most part, has come from paywalled content. And this is something I've mentioned plenty of times before, and it is the reason why I don't go into great detail when it comes to how I use market structure and how I use smart money concepts. But for a simple breakdown, a break of structure is a candle close above the break of structure level, which, if you're looking at a reversal, would be a lower high or a higher low. If you're looking at a continuation of structure, it'd be breaking past the last higher high or lower low in a trend. But I'm really focusing on reversals for this sequence of confirmations. A strong break closes significantly above or below, and a poor break barely closes past and will often have more wick than body past the break of structure point. And that is important because you do get false breaks of market structure, and there are many other things that I use to judge whether it will be a false break or not. Again, not something I'm going to be going into detail with, but I think it is good practice to definitely look for at least a strong break, a break that closes significantly past the break of structure level. And another important point, it must be a close on the correct time frame. It can be a break on one time frame, but on a higher time frame, it can be an SFP. So it is very important to make sure that you're viewing it on the correct time frame. And that is yet again something I'm not going to go into detail with, but to lay it out very simply, if you're looking at a trend, you want to be able to view the swings of the trend very clearly. Whereas if you go to such a high time frame where that trend starts to be very crunched up and start to look like this, that is not a very clear trend. So the more crunched up it is, the less likely that it's going to be a significant trend on that time frame. So I would not view this as the correct time frame to view this structure on. Now, the way I manage these trades also has to do with market structure and smart money concepts, and I will not really go into much detail as to how I do that. I will not explain again. I already did that. Check out White Phoenix if you want to know everything I do when it comes to market structure and smart money concepts. And I don't like to use, poor looking low time frame market structure, especially if there is a prevalent higher time frame trend, but the break you're viewing is on a lower time frame. It can be sketchy. So at this point, we know that, a lot of times before you see a break of structure, you may see divergences as price puts in a lower low, or if it's an uptrend, a higher high. You'll often see divergences prior to market structure breaking. I would say more times than not you do, at least, again, using Market Cipher, which I think is the best indicator. And now I want to go over, some confirmations that you can look for on a retracement, because, there are a lot of strategies that I use to enter on retracements, such as Market Cipher Basic Strat, Local Market Cipher Div, CVD Absorption, all things that I have made separate videos on my channel. I have, playlists for these kind of things. If you go to my Market Cipher playlist, I have a Market Cipher Basic Strategy right here. I also have some other, videos going over Market Cipher strategies that I use. I have an order flow playlist where I go over how I use order flow, a free tool for order flow, which is coinalyze.net. And this will go over how I use CVD absorption. I believe this is my CVD absorption specific video, but I have a lot of videos where I, combine things like Market Cipher confirmations along with order flow. So I suggest, checking out my playlist if you want to learn more about this stuff. Now, you do not always get a retracement. Sometimes you can break market structure and then basically go straight up to your target. I've seen that happen plenty of times. A retracement's not guaranteed, and I like to refine areas where I'd like to see the further confirmations come in, whether that be fib levels, whether that be fixed range levels of the previous range that we traded in. Maybe I'll take a fixed range of this little bit of price action here, look for things like the value area high, point of control, look for confluence with fib levels. And those are just a few things that I personally like to do. You can, look for confirmations with anything. Maybe there's higher time frame levels. Maybe there's a daily open somewhere. Maybe there's a VWAP. So I like to really narrow down the areas where I'd like to see my confirmations at. It's really situation dependent. Sometimes I kind of prioritize the confirmations over the refined areas on a retracement because we already got a sign of strength with the market structure break. If we, come down, we see confirmations at an area that, isn't really exactly where I wanted to see. Maybe my refined area was a little bit lower, but the confirmations happened prior to hitting that. Then, maybe I will say, all right, that's good enough. And there are many confirmations you can look for to have confidence in a retracement making a higher low or a lower high in the newly formed trend. And to list a few, you can look at Market Cipher Basic Strategy. Basically, just looking at Market Cipher showing signs of continuation. So let me take this and move this to the upside a little bit so I have more room. And let me doodle out a little Market Cipher drawing below here. Pretend everything below this line is Market Cipher. So we saw the divergences as we put in that last lower low, with price putting in a lower low, yet momentum putting in a higher low. We also saw money flow put in a higher low. I will make that one a different color. Let's say it's purple because it's in the red. So money flow also gave the divergences, meaning it put in a higher low as price put in a lower low. And let's say that this line right here is the zero line. So then as you get the break of structure, Market Cipher gets to move above the zero line. Let me change that back to white. And then as you come down to get this retest, you get a continuation of basically direction. You see a trigger wave form, which is putting in yet another higher low. You see money flow also continuing to the upside, maybe starting to cross over. That is, in general, Market Cipher Basic Strat. You're just looking at the direction of Market Cipher, and you want it to be backing up basically your idea. I have noticed that a lot of times when you see a Market Cipher Basic Strat entry, a lot of times, there is a market structure break to go along with it, which, I think adds more confluence because you are, now looking for a reason to put in a higher low for another higher high. So, with that very rough drawing, that's the general idea of what I'm looking at with, a Market Cipher Basic Strat confirming a higher low or a lower high. You can also look at local Market Cipher divergences. which you could look at a lower time frame and say, all right, as we come down for this retracement, maybe I want to see another confirmation when it comes to divergences, with price putting in a lower low, ideally into a refined area, and market cipher, given those local divergences. I'm not going to redo that whole market cipher drawing. You can also look at order flow, look for things like CVD absorption. If you want more details about CVD absorption and how exactly it works, again, check out my playlist. I do think CVD absorption is a great confirmation to use for a higher low or a lower high. Or you could look at the opposite, which is trades opening in your desired direction upon the retest. Both can work, but if it's a poor market structure break to begin with, maybe joining in on the liquidity that can be swept if that market structure break fails is not a great idea. Meaning, let's say, price barely breaks structure here. Maybe there's other reasons to make you think that, oh, I don't really trust this market structure break. And then as price starts retracing, it just kind of keeps on putting in lower lows, yet you see people continuing to open up a ton of long orders. Then you would think that, okay, well, they're probably putting their stop losses down below this low here. So if there's reason for you to think that maybe this market structure break here is not going to work, maybe these people longing are going to get swept out, then it might not be such a good idea to include yourself in those people that can get swept out by basically taking out that significant point. But if it's a convincing market structure break, and if there's reason for you to think that, yeah, we certainly will make a higher low here, and also if there's further confirmations to kind of back that up, like local market cipher divs or whatever you're looking at, then seeing trades open up in your direction can give fuel to that idea working. So it's kind of a tough thing. I think I prefer to see CVD absorption there. But again, if it's a good market structure break, or if there's reason for me to think that this idea is going to work, then seeing trades open up in your direction can definitely be a confirmation that it may work. So now I'm going to quickly run over a few examples. I want to look for significant pivot points, and let's see if we saw these three different types of confirmations. Did we see divergences prior to a market structure break? Did we see a retest with further confirmations? And so first off, I'm going to circle this reversal right here. And the first thing I'm going to point out is the divergences that we saw on the low. Price put in a lower low, yet if I move market cipher up and get those annoying buttons out of my way, you can see that momentum put in a higher low. So there was a momentum divergence here. Money flow was not really backing that up. Money flow put in a lower low. That maybe would have made me feel sketchy about entering off that divergence trade. Maybe I wouldn't have entered that as a ninja scalp entry, but rather I would have waited for further confirmations. But what happened following that divergence? Well, we broke market structure. We took out the last lower high, and at that point, if there was reason for me to think that this market structure break would give such an aggressive move, I could have entered right then and there with my stop loss below that point and targeted wherever I was targeting. And, it would have been decent risk reward up to where we're at right now. Would I have known that we would have got such an aggressive pump? Not really. I mean, things were in general kind of looking bearish here, so maybe entering off just the break alone wasn't the most confident play. So maybe you can wait for some kind of a retracement with a bit further confirmations. Now, what happened on the 30-minute as we got a retrace? Well, we kind of got a shallow retest here and then just kind of took off. It's not looking like on the 30-minute there was much, good continuation signs here, but we can look at lower time frames. And, on the 15-minute, I am seeing something pretty interesting. I am seeing a continuation of direction with momentum. So as we got this retest here, momentum put in a higher low. It printed a trigger wave below the 0 line, which put in a higher low to this one. That being the divergence. And it looks like on the 15-minute there even was a bit of a money flow div on that low. Money flow was putting in higher lows as price was coming down. So there was better confirmations on the 15-minute. And then that trigger wave, really does look juicy right there. Now, it probably would have been hard to tell in the moment that, all right, this trigger wave is definitely going to be it. We could have easily, just got a bounce from there, retraced a little bit lower, maybe seen momentum get a bit further moved down and still continued the direction. But, at least in hindsight, the confirmation was definitely there. We saw continued direction. We saw money flow continuing to the upside. That is a valid market cipher basic strat entry. And one more thing I can look for local divergences as we put in that last lower low. On the 5-minute, was there really anything? No, because price put in a lower low here, yet momentum also put in a lower low, so no local divs there. We can go to the 3-minute. Yeah, and on this lowest point, it's not looking like there was really any divergences marking that as a low. Maybe there was on the 1-minute. I'm not going to go down that far. But one more thing I do want to point out with this idea is there was at least something with order flow kind of backing this up. So as price put in a higher low here, if we saw absorption, we would have saw CVD put in a lower low as price put in a higher low, and we would have saw open interest increasing, showing that short orders are in control, and that while open interest increasing shows that new trades are opening up rather than long orders closing. Because long orders closing is a short order, but you're taking volume out of the market. Open interest is just showing is volume coming into the market or coming out. But what we did see is we saw CVD increasing along with OI at this specific point. We saw long orders opening up. So CVD going up shows that long orders are in control, and open interest increasing shows that that is long orders opening up. So there were trades opening up in the direction that makes sense based on the newly formed trend. So there was at least some kind of confirmation here. There were people longing this, and they were certainly right. All right, next let's go to the next significant pivot point. Let's do this one up here because I do believe that there were divergences on that high. So looking at this last higher high right here, we can see that there were divergences on the 15-minute. As price put in a higher high, we saw momentum put in a lower high. We saw, I believe, money flow put in a lower high as well. So there was good divergences with both momentum and money flow there. And there was also an SFP, meaning price just wicked out that last high. So that is kind of a further confirmation. On a lower time frame, there may have also been a divergence with an SFP right here prior. And this trade idea, did temporarily work out, but it eventually ended up putting in a higher high. So, if you entered this first trade, maybe you were able to lock in the trade, maybe you weren't. But, upon the second one, that one really ended up being the juicy opportunity. But maybe you missed that trade. Okay, well, then you could have waited for a market structure break. You could have waited for this higher low to be taken out. And, if you had reason to think that, all right, a break here would give a significant move to the downside, you could have entered on the break. Now, what about a retest? We did get a retest here. Price did pull back up. It looks like, we even on the 15-minute saw a trigger wave and a continuation of money flow. It was kind of slight, but money flow did put in a slightly lower high here, it appears. Let me really zoom in to verify that. Okay, on the 15-minute, it did put in a slightly higher high there, so money flow not really giving great continuation signs, but we can go to the 5-minute. Let me circle this area, and let's go down. Having bar replay for this would really help, but I've been cheaping out on trading views, so I don't have that at the moment. But here, yeah, we can definitely see that there is a valid market cipher basic strat setup. So we have the anchor wave, we have the continuation of overall direction, and as we got that retest, momentum yet again put in a lower high, and money flow put in a lower high. So yeah, that would have been a valid market cipher B entry as well. And hopefully you were able to refine some kind of area to look for that. But, if not, maybe as price started pulling away, you decided to enter somewhere here and still got very good risk reward for this move to the downside. Now, I'm not going to check order flow for this one. I'm not going to go back that far. I guess I'll look on the 15-minute because I just pulled it up. But it does not look like we saw absorption, so that is ruled out. But you don't always see the order flow confirmations. That is just kind of something extra that I like to add in. It can give me extra confluence. If I see that, then I can have more confidence in the idea. But yeah, I think I'm going to leave it at that. I want to just go over a few examples here showing that, hey, oftentimes you do see divergences prior to a market structure break, and then following the market structure break, there are ways to confirm a higher low being put in for a continuation. And I will be following up with this video. Again, I want to do some live testing. I want to, kind of refine these ideas a bit, but I just wanted to, get these concepts out there. So thank you all for watching. If you enjoyed, please consider leaving a like, subscribing, and leaving a comment. I really appreciate all of the support on my channel, and I will see you all in the next one.